Global economic prospects have improved thanks to progress in reducing deficits in advanced economies. Recovery activity is expected to speed up in the second half of 2013. What are the main challenges and what could we expect? To look at that, we're joined by Carlo Cottarelli, Director of the IMF's Fiscal Affairs Department. Thank you for joining us.
Thank you.
Very few European countries can be happy with their deficit positions. The 3% of GDP target is looking unreachable in the near term for many. Cutting that means also reducing growth. How can government overcome that contradiction?
Yeah, that's a difficult issue. I mean, fiscal austerity, it's a bit like a medicine. You have to take it, but if you take too much, it's pretty bad. So you have to take it in the right amount, and that's the struggle a bit that Europe is facing, to take the fiscal austerity medicine in the right amount. What we see that is happening is that in general the pace of adjustment, I think, is the right one, but Europe should move a bit away from focusing on specific nominal targets. The 3% target will have to be met, but does not need to be met in a specific year. Now, on this, however, I have to say that I'm actually encouraged by the fact that the European Union has actually shown quite a lot of flexibility in addressing specific cases and allowing countries to slow down the pace of adjustment when necessary.
In the US, you say that a sharp fiscal contraction has been avoided, but the politicians still can't reach agreement. How can the US reduce its unsustainable debt unless that is resolved?
Something needs to be done both on the spending and on the revenue side with a medium-term perspective. Unfortunately, it has not yet been possible to reach agreement, consensus in Congress on a medium-term fiscal adjustment plan. Although one has to keep in mind that even in the absence of a plan, fairly large cuts have been, the deficit has been reduced quite a lot in the United States since 2009. It has dropped by more than 6 percentage points of GDP. If anything, one can say that it's being cut too fast. This year the adjustment in the deficit is happening at a speed that is a bit too high compared to what is happening in the real economy. In the US, the recovery is still fairly fragile.
How much do you base your optimism on the fact that emerging markets and developing economies seem to have started to pick up?
The world economy is proceeding at 3 different speeds, and the fastest speed is the one that is observed in emerging markets. Emerging markets were hit by the 2008-2009 crisis much less than advanced economies. So this is contributed to the fact that we now continue to see growth in these economies. We have also to keep in mind that this is just the process of catching up of this economy with increased productivity growth in these countries and strong growth also in employment in these countries. So yes, we think that this process is going to continue. We continue emerging economies to rise at a pretty fast pace over the medium term.
It was Carlo Cottarelli, Director of the IMF's Fiscal Affairs Department. Thank you very much.
Thank you for inviting me. Thanks.
The International Monetary Fund has trimmed its projections for global economic growth for this year and next. It says that's to take into account sharp government spending cuts in the United States and Europe's struggles with recession. The IMF's chief economist says advanced economies face a bumpy road.
We have moved from a 2-speed recovery to a 3-speed recovery. Emerging market and developing economies are still going strong, but in advanced economies, there appears to be a growing bifurcation between the United States on the one hand and the euro area on the other.
The US gets the best outlook. Japan's predictions were much stronger than in January, while the growth forecasts for the eurozone were cut with a deeper recession this year than previously seen. The IMF warned Europe not to relax efforts to combat its debt crisis given Cyprus's messy bailout and the political stalemate in Italy. It also suggested a eurozone interest rate cut would help.